Gamestop. Shares of the game retailer surging again today, at one point topping 70%. Why? Because of a meme.
This meme stock mania, I'll call it, is back in full force. Roaring Kitty started posting on Twitter that folks should pile into stocks that were being short squeezed.
I think it's hysterical because it's like a joke because, there is no relationship, again, to where the stock trades at its fundamental value. And that's really what meme stocks are all about, right? There's nothing wrong with speculating. This is speculation and not investing. And it can be fun, it could be exciting, but it's also very dangerous.
Hello, investors and market watchers. Welcome back to Currency Wizard. Today, we're diving into the roller coaster world of the stock market. We've seen some incredible highs, from GameStop's jaw-dropping surges to the S&P 500 reaching all-time highs. What's driving this volatility, and what can it teach us about investing? Don't forget to hit that subscribe button as we explore these thrilling financial phenomena. Stock markets are often unpredictable, but recent events have taken this to a whole new level. Let's start by talking about a story that seems like it's straight out of a movie.
Protesters are sounding off on social media sites, calling for stock tips that will make the group rich. Their meeting place? A subreddit group with more than 3 million members known as Wall Street Bets. It was there that the idea of buying GameStop went viral.
There's nothing normal about what you're seeing when it comes to this stock right now.
In early 2021, GameStop, a video game retailer many thought was on the brink of becoming obsolete, became the center of one of the most astounding stock market events in history. Fueled by a group of retail investors from a Reddit community, the stock price surged by over 1,500% in a matter of weeks. These investors used their collective power to create a massive short squeeze, dramatically driving up the stock's price. Typically, hedge funds and large institutional investors bet against struggling companies by short-selling their stocks. What we saw with GameStop was unique because it was primarily driven by individual investors, not big institutions. This event not only showed the power of social media and collective retail investor actions, but also highlighted the vulnerability of the market to sudden, unexpected shifts. On the other end of the spectrum, we have the S&P 500, which continues to hit all-time highs despite global challenges like pandemic and economic uncertainties. The index has shown remarkable resilience and growth, largely buoyed by strong performances from tech giants. The S&P 500's growth is a sign of investor confidence in the market's long-term prospects, driven by the corporate earnings and unprecedented levels of stimulus from governments and central banks. As we've seen with the extremes of GameStop and the S&P 500, the stock market today operates on a blend of traditional economic fundamentals and speculative dynamics driven by social and media narratives. Understanding how to navigate these two can be a powerful strategy for investors. Let's break down how you can leverage both for a balanced investment approach. First, let's talk about traditional investments driven by economic fundamentals. This approach focuses on long-term value creation and is based on metrics like earnings growth, debt levels, market share, and economic conditions. These are the stocks that form the backbone of any solid portfolio. For example, investing in companies with strong fundamentals, those with consistent revenue growth, solid management, and competitive advantages in their industry tends to yield reliable returns over time. These companies are often less volatile and provide stability during the market fluctuations. On the other hand, speculative investing often capitalizes on trends and narratives shaped by social media and news.
GameStop shares surging over 70%. It was then halted for volatility. We're looking at gains of about 71% ahead of that. Miles and I were talking about this resurgence that we've seen in so many of these meme names. A lot of the move that we're seeing in GameStop here tied to a tweet out from a Roaring Kitty.
This can include riding the wave of hype around certain stocks, sectors, or technologies that are gaining popularity, regardless of their underlying economic fundamentals. A prime example is the surge in tech stocks during the recent work-from-home trend, where even companies without profitable models saw significant stock price increases. Another is the cryptocurrency boom, driven by largely social media buzz and speculative trading. Now that we've discussed traditional and speculative investment strategies, here's how you can use these two approaches together. Core investments allocate the majority of your portfolio to solid, fundamental-based investments. These are your core holdings and should provide steady growth and dividends. Satellite investments use a smaller portion of your portfolio for speculative investments. These can offer high returns and capitalize on short-term trends, but they come with a higher risk. It's crucial to manage the risks associated with speculative investments. Always know how much of your total investment capital you're willing to risk on less predictable assets. Use stop-loss orders to limit potential losses and take profits at predetermined levels to avoid the emotional pitfalls of speculative trading. Stay informed about the latest market trends and economic indicators. Use tools like financial news, analytical reports, and social media to gauge market sentiment. However, always cross-reference with solid, fundamental analysis to make informed decisions. By combining these strategies, you can enjoy the best of both worlds: stability and the potential for high returns. This dual approach not only diversifies your investment portfolio, but also aligns it to adapt dynamically to both traditional market movements and modern speculative trends. Remember, the key to successful investing is not just choosing the right stocks, but in how you manage your investments. Integrating both fundamental and speculative strategies requires discipline, research, and a clear understanding of your financial goals and risk tolerance. Thank you for watching today's deep dive into market unpredictability. What's your take on these market movements? Any experiences you'd like to share? Drop a comment below. We love hearing from you. Until next time, keep your investments smart and your portfolio strong.